Consistently picking the right stocks forms the bedrock of a top performing portfolio. In today's video, I'll explain how we identify the best stocks in the market using tech and our unique 4PS method. By following along, you can apply this analysis process to determine if the stocks you're interested in rank among the top performers, and then make a more informed decision on whether you want to invest in those stocks and take risk or not. Our process is simple yet highly effective at finding the cream of the crop stocks. The process is broken down into two straightforward steps. Step 1 requires a good scanner. They vary in price from free to expensive. You know how it is, you get what you pay for. Cheap and free are limiting. Good scanners open up unlimited opportunities. We've been using our scanner of choice for years and developed a proprietary system that consistently picks out winning stocks. It eliminates the guesswork of stock picking and endless online research. It also offers a methodical approach to answer a crucial question for investors: which stocks to buy? Now, when it came to finding top performing stocks, technology transformed my approach. It broadened my options beyond the usual lackluster stocks that never lived up to the hype. I realized that there were hidden gems out there waiting to be found. Learning how to uncover them was key. A reliable scanner is essential for serious investors looking to boost their portfolio performance. Here's something I learned quite early on. If I wanted to be a good investor, I would need to invest in the right tools for the trade. I grasped this from my days in high-end advertising photography when we used a £60,000 Hasselblad camera. Now, you heard that correctly, £60,000. Our images went on the side of buses and on massive billboards, and so there was simply no room for pixelization of the images. No camera, no clients. Simple. The same applies to good stock picking. No scanners, no top stocks. And that means an underperforming portfolio. Without our scanner, we simply could not find the stocks that we have invested in to outperform the market over the years. Next up is, what criteria do we program into the scanners to find these stocks? Our stock criteria is simple. We want stocks outperforming the market. Now, what do we mean by that? Well, the S&P 500 is a good proxy of the overall market. It's an index of the 500 largest US companies, and it gives us a benchmark to compare individual stock performance against. We want to find stocks that are beating that benchmark, stocks that are rising faster and delivering higher returns. So how do we do this? Well, here is the criteria that we look for. First of all, we want stocks that are above the 200-day moving average closing price. We also want stocks with the right volume, typically 1 million. And we want the volume to be increasing. We are also looking for stocks that are breaking out, which means stocks that are creating higher highs. We then hit yes on the scanner and we let it filter through almost 20,000 stocks over the next 10 to 15 minutes. Once the scanner has done its magic, we will then be left with a more manageable list of, say, somewhere between 200 to 300 stocks for us to go through manually. This is where step 2 comes in, using charting software to analyze these stocks. Good charting software will allow you to go through a sizable list of 200 to 300 stocks in minutes. This is really not as daunting as you may think. It's actually a very straightforward task when you know how to use your charting software correctly. Like first learning to drive, there are a number of moving parts that we have to get used to, but with good guidance and consistent implementation, it soon becomes second nature as everything comes together. This is the same when learning to use charts to look at stocks. It's just a case of familiarization, and when you learn to do this correctly, you will never look back. I often hear people say that their only regret once they learn how to scan and analyze the market correctly is that they wish they learned this years ago. The best techniques are simple to learn and execute. It's the consistency of doing the simple things where people often fall short. Now, I want you guys to understand how incredibly fortunate you are. When I first started investing in 2007, 2008, the early iterations of software were extremely expensive. I paid thousands upfront for charting software and then hundreds monthly for live data. Today, you have charting packages, which we use and recommend for our own community members, that cost hundreds a year. That means more of your investment capital can actually go towards growing your portfolio and making good investments, and not just feeding the software companies. It's a real game changer. All of this money you save and invest correctly will compound to significant amounts over the coming years. So we take this list of 200 to 300 stocks created in step 1 by our scanner and import them into our preferred charting software. We then use some custom charting tools that we've developed to really put these stocks under the microscope. We analyze them across multiple timeframes, the monthly, the weekly, and the daily timeframes, looking for what we call multi-timeframe alignment. This is when all 3 timeframes are moving in the same direction, either bullish or bearish. The key factors we're assessing are based on our proprietary 4-phase sequence method, or 4PS method for short. Here's a quick breakdown of the 4 phases. Phase 1, identifying a stock with a proven performance history. If it's performed well in the past, it's likely to perform well in the future. Phase 2, waiting for a prolonged consolidation or a base to form. A good base is where a long-term trend can start from. Phase 3, confirming the breakout from that base, and this is where patience comes in to allow for that breakout to take place. And then phase 4 is entering the stock at the start of that next major uptrend. On the monthly chart, we're looking at past performance, price patterns, and some key technical indicators. On the weekly and the daily, it's all about the key moving averages,
specifically the 50 SMA and the 200 SMA.
So if we get that multi-time frame alignment, that's when we know we've got a winner on our hands, either a bullish winner or a bearish winner. So in summary, if the asset has performed well in the past, it's very likely to perform well in the future. If it's breaking out from a long-term consolidation or sideways market, that's a strong sign that the market is looking to push further up. If it's above the moving averages, the market is bullish and also confirming the next leg up. What we have is multi-time frame alignment, and that's when we look to take a position. Now, once we have that multi-time frame alignment, it's all about execution. We use the daily time frame to pinpoint the ideal entry point, set our stop losses, and manage our positions with trailing stop losses. It's a systematic, disciplined process that has allowed us to consistently find the best stocks that leave the broader market in the dust. So, to wrap it up, that's the 2-step process we use to uncover the winners in the stock market. Step 1 is using a professional grade scanner to filter through thousands of stocks in minutes to create an initial shortlist of top stocks. Step 2 is then analyzing those top candidates in depth using bespoke charting tools that we have developed and our proprietary 4PS method. This is our exclusive techniques that identify stocks that average us over 30% per annum. Now, whether you're a seasoned investor or just starting out, this will transform the way you approach stock picking. Here's the thing, this process will mean nothing if you keep making the common mistakes losing investors make. Watch this next video to find out what they are and the practical solutions I share to never make them again. Until next time, stay disciplined and keep those profits rolling in.